Hello, Central Kentucky and beyond, and welcome back to another episode of my Kentucky Home Podcast. I'm very excited to have a good friend of mine with us today. I have with us David Short from Investments and Financial Planning, LLC. David is the managing partner there. And before we get started, though, because the financial industry is pretty regulated, we do have to say everything we're talking about today is for educational, entertainment purposes. So if you do have any questions, do not construe this as financial advice. Reach out to your own financial planner and address those questions to them. But David, thanks for being here today.
Thank you for having us. It's a pleasure to be with you, and look forward to our conversation.
Good deal. Well, so I got to ask, how did David Short end up in the financial planning business? Like, were you kind of like the Alex P. Keaton running around as a kid with the briefcase and going to elementary school, or?
You know, it was interesting. I actually graduated from then Pikeville College, University of Pikeville now, semester early, and I'd majored in accounting and management and didn't really know exactly what I wanted to do. And ultimately, I had a brother that was already working in the business, and as a result of that, I graduated on a Friday in December. I interviewed on a Monday, and I moved to Lexington shortly after that, and have literally been in financial services ever since.
Okay, so no bouncing around for you, huh?
No, it's kind of all in. Didn't know what I was getting myself into in some respects, but like I said, so since 2002, so we've been doing it for several years, and have thoroughly enjoyed that, and certainly learned a lot along the way.
Well, good deal. Well, I'm getting closer to 50, and I still don't know what I want to do, so I guess you're in a better position than I am. So.
I think we all, sometimes we fall into things. Sometimes we're not really sure, but it has been a natural fit, if you will. But at the same time, you know, I jokingly tell clients sometimes and friends that, you know, growing up in the mountains, you know, my mother always used to tell us when we were small kids, you know, there's two things in life you don't do. You don't ask people for money, and you don't talk to strangers. And so here we are, you know, when we meet new people, till we become friends, we're strangers. And inadvertently, we do obviously end up talking about money sometimes along the line. So certainly good advice from Mom, but at the same time, it is interesting, the different things that you run into. So,
Gotcha. Okay. Well, so let me ask you this, and maybe I'm wrong, and correct me if I am, but there's a lot of people I think that maybe think, okay, well, I've got a salary, or I got a 401k. We don't have much money left at the end of the month. You know, what good's a financial planner going to do for me? So why should someone consider a financial planner, and what's the benefit for them for that?
Sure. Yeah. I mean, I often will ask clients or prospects or just people that we talk to, you know, would everybody agree to the simple notion that, you know, there's probably one or two things that all of us could do that would make our financial situation worse. And we get the joke, we get the chuckle, and you know, people's going to say yes. So we then have to ask the question, of course, you know, is it possible that maybe there's one or two things or more that maybe they can do something to make their situation better? So I think when people, you know, maybe it's just because when they were growing up, or maybe they just don't talk about money in their families. So I think a lot of people have the misconception that maybe they don't have enough to be working with a financial advisor. So I think, you know, we certainly encourage people, have a conversation, find somebody that's a fiduciary, somebody that's required to place your interest ahead of their own. And I think if you do that and have a good conversation and find somebody that you can like and trust, you can certainly find out, you know, there's usually things that you can do to improve your overall situation. So, you know, sometimes it's as simple as there's a lot of people that don't operate on a budget. They don't know how much money they have coming in. They don't know how much they have coming out. Maybe they haven't considered what their Social Security is going to be for retirement or their pensions. What's the best way to take money out of their 401k? Does IRAs or Roth accounts, do those things make sense? Certainly we have conversations about, you know, you've got people that are retiring before 65, and they've got to figure out what are they going to do for health insurance. What about Medicare? When is the best time to take Social Security and some of those other things? So I think there's a lot of different potential ways And I think if somebody finds somebody that they can sit down with, they can start having a conversation about, does it make sense to work with them? And I think anybody that's in our business that is operating as a fiduciary certainly would be able to help somebody at least realize whether or not it would be of benefit to be working with somebody as a planner or advisor.
Okay. And it doesn't necessarily have to be like stock. I mean, I don't like reading about stocks. I don't like learning about it. It's just something that's never interested me. So for me, having somebody that can, I know basically what I've learned from you, and that's about the extent of my knowledge. But so I'm not going to be one that's going to play around with it. And typically, a 401k plan is essentially somewhat a stock portfolio. It's just based around your retirement, right? So having somebody that kind of can look at that for you, even if it's through your employer,
Sure,
can be a benefit.
Yeah, so more often than not, it's more funds than individual holdings. But depending on the company, you may have some individual stock there. But at the end of the day, yes, I think it's a lot of people just maybe they get used to doing things a certain way, and they think that, well, I've got a retirement savings plan at work, I don't need anything else. So we find take the 401k as a great example. Most people have those. Ultimately. The vast majority of those accounts are pre-tax assets. And while we find that is one of the absolute most effective ways to accumulate assets, it's not necessarily the best way to distribute assets when you get to retirement. Now, it's not that it's bad, it's just there are other things to consider. So you're right. It's not always a conversation about how do I need to invest money. It could be other things. We have clients sometimes that want to fund their grandkids education, whether it's K through 12 or college. Sometimes we have clients that need to make that Social Security decision or make a decision about, do they leave the 401k or do they roll it over and do something different. Certainly some tax planning can come in from time to time, asset allocation planning, even insurance planning. A lot of people sometimes don't even know what they have. And it can be as simple as figuring out not only what they have on their insurance, but explaining it to them and making sure that it's up to date. And then certainly one that we often find that is too often overlooked is beneficiary planning. And that can be on an investment account, Clay. It could be on their life insurance policy. But clients have to understand that they need to make proactive decisions that's based on their situation, and those things need to be reviewed from time to time, and usually they're not.
We just kind of have been going through that ourselves as we're getting a little bit older. We kind of started to think like, okay, we've still got some young kids at home, but we're like, okay, what if something were to happen to us at the same time? And it led us down this road of doing some estate planning and some financial planning. It's not fun to talk about by any means, but once we're kind of in that position to have it done, it was a huge sense of relief. I really felt a weight off my shoulders knowing that we actually had a plan in place.
Yeah, it reminds me, of course, I know you probably remember too with the young kids at home. Every time you go and get admitted to the hospital with the wife and you're getting ready to have another baby or a child in the family, they start asking, do you have a living will? And it kind of hits you if you don't. Yep. To say, why are they asking me this? Is there something I'm missing? So I would echo what you just said. For me and my family, between college education planning, retirement planning, life insurance planning, disability, health insurance, budgeting, how to invest the money, asset allocation, all these other things, I probably personally got more personal satisfaction out of doing the estate planning. And I like all the pieces, don't get me wrong. But just knowing that my family is going to be taken care of from a legal perspective. And certainly people, there's a lot of people that want to do that on their own. And I'm not an attorney and I don't pretend to be. So we always tell somebody, you need to find a good qualified estate planning attorney to get those documents in place to make sure that whatever your desires are, and you're right, if something happens to both of you, who's going to be guardian of the kids? Who do you want taking care of your children? They're not pleasant things to think about, but if you don't proactively do that, what's going to happen?
Right.
So it's important things to consider.
Yeah, and you kind of got to keep reviewing it, right? Because we just, like, for example, we just redid our life insurance policy because, our situation has changed than it did 10 years ago. So we wanted to make sure we had enough coverage. So, and that kind of leads me to, we talk a lot about financial planning. People think about their stock portfolio or retirement or things like that. But life insurance, mortgage, all of those are actually part of your kind of financial package as well. I mean, one of the biggest investments, well, actually the biggest investment most people make is going to be their house. So how you structure that mortgage or, again, the household budget, all of that kind of comes into play that's really the biggest asset most people have. And there's a lot of poor programs out there with a lot of shady people pushing them.
Yeah. So part of what we're doing, especially when not only we're talking to a new prospect, but even existing clients, is we want to look at the balance sheet from time to time. And we've had this conversation once. We've had it many, many times over the last 12 to 16 months or so. And that is, okay, you've got this mortgage. When was the last time you looked at your interest rate? When would you bought a 30-year mortgage? What's your interest rate? And I've seen plenty of those in the 4 to 5% range. And of course, as we know, and it always changes, so it's something that you have to keep in mind. But I have had a few clients that thought that when they saw some advertisements about what potential interest rates were for refinance, they didn't believe it because they were so low. So we're encouraging people, find somebody to talk to. Go back to your local bank and say, hey, this is what I've currently got. Should I stay in this? Let's run some numbers to see, does it make sense to refinance? Because that could be a major win. We're seeing scenarios where clients are going from maybe a 30-year mortgage, maybe they've been in it 4 or 5 years. A lot of those folks are being able to refinance to a 15 or 20-year loan because of the difference in interest rates, and it's still saving them money. And they've completely chopped out many, many years worth of mortgage payments that they would have been making to the bank or financial institution. So we like scenarios for clients when we go over that balance sheet. When you look at the whole package, principal, interest, taxes, and insurance, we want a client to look at what their take-home is. Banks are going to look at and base the loan, what you could get, off of gross income. So we want them to look at their take-home income and say, okay, we don't want so much of our payments and our monthly budget going towards a house payment that's the only thing we can do. If we do, then we're going to end up hating the house.
House poor, right?
You're going to be house poor, and we don't want that. So that's a scenario that the vast majority of clients that we work with that are retired or transitioning towards retirement, and I would say 55 plus, the vast majority of people that we work through the years that do not have major financial issues in retirement are the people that don't have any debt. So I'm talking about paying the mortgage off as well. So we believe part of your investment plan should be investing to pay the mortgage off. Now, we don't want you to get to retirement. We talked about being house poor. We don't want you to get to retirement, though, and you've got the house paid for, but you don't have anything else as well. So there's several things to consider there. I think that's one thing that somebody could benefit from, having a conversation with an advisor. We don't do mortgages. So we're just going to give good, straightforward, objective advice and find out what the best thing for them is. They can get a couple of different rates, maybe one from their current bank. If they have a great relationship with their loan officer, absolutely. Maybe the loan officer isn't there anymore. They don't know who to contact. You can always get a referral to somebody to have a conversation to see if refinancing makes sense. In a lot of cases, it does.
Okay. Now, a lot of people might be under the impression, too, that financial planning is really expensive. And I've found that it's not, and it actually is, definitely worth whatever the cost would be. But can you kind of talk a little bit about that? And
Sure. Yes. A lot of different advisors charge different ways, but, kind of the traditional business model, if you will, you're either going to be on the commission-based side of business or on the fee-based side of business. Use a life insurance policy as an example. Regardless of who you buy that from, the insurance company is going to pay somebody a commission. And it doesn't matter if you buy it from your planner or if you buy it from an online scenario, if you will, with, some of these quoting engines and that sort of thing online. So, ultimately, I think it's a matter of having that conversation with somebody. A couple of things come to mind. One, we always disclose on the front end and throughout the course of discovery. We want the clients to know, if you work with us, this is roughly what you're going to be doing. And this is how we're compensated so that they know. And a lot of people, if you're not, number one, getting that verbally from the advisor, the other part of it, Clay, is they are required, any advisor is required, especially being a fiduciary in the investment advisory world, they have to provide disclosures to clients. That not only if they're verbally saying something, well, here's our disclosures, here's the history of our firm, here's the background of the firm, here's who we are, but also here's how we're compensated. If there's any conflicts of interest, those need to be discussed. There's this thing now that's called a client relationship summary, that ultimately gives you not only a guide, if you will, but gives you here's some questions you need to ask about the person you're getting ready to do business with. So predominantly for us, we are predominantly a fee-based advisory firm. We do have a broker-dealer relationship, but at the same time, the vast majority of what we're either doing financial planning and doing that for a fee, and or managing assets, and we're charging a fee for that. So, we always say for managing assets, loosely, it's around 1%. That's about the going rate. Ultimately, could be a little bit higher, could be a little bit lower, depending on the size of the account. But we let the clients know on the front end, hey, if you work with us, if we get to the point that it makes sense, and I don't want to be prejudgmental, but we want to make sure that that loosely we charge 1% to manage the assets. The other part of it for financial planning, on average, we're charging about $1,000 per year for financial planning. That's covering our meetings, it's covering the plans, it's covering everything that we're doing behind the scenes, and certainly the deliverables that we're giving to clients. Here's the best part about it. We'll give clients or prospects up to 3 meetings, 100% complimentary. So we don't want somebody to feel like, I don't want to obligate myself to paying somebody, and I don't know what kind of experience I'm going to have. I don't know the type of people that they are. I don't know the background of the firm and that sort of thing. So on the front end of this, we say, we can date a little bit before you decide if you want to work with us. And our goal is to give you plenty of advice during those first 3 meetings. And we say in that first meeting, Clay, look, if you get everything that you need in the first 3 meetings, that's perfectly fine with us. But starting in that 4th meeting, we are going to ask a client to sign a financial planning agreement with us and then continue the process if it makes sense for them. Sometimes, they may come in and the only thing they may need to do is revisit their life insurance, get their budget in order, and fund their emergency fund. I'm not going to charge somebody for telling them to do those basic fundamental steps of financial planning, if you will. But we'll meet with them a few times and we'll say, hey, do these 3 or 4 things. When you get those things in order, come back and see us. We don't feel comfortable taking a client on. Sometimes, if it doesn't make sense, we're not going to bring them on. If they need to be paying off some consumer debt and they need to be working on their emergency fund, we'll have that conversation and say, hey, do these 3 or 4 things. Come back and see us in a couple of years.
Gotcha. So you mentioned emergency fund, you've mentioned budget. These are all just kind of like, if you were to say, okay, the top couple things that every person needs to be looking at when it comes to their financial situation. I think budget probably comes top of mind, but I think the emergency fund isn't talked about enough.
It's not. Yeah, so I think ultimately the vast majority of adult Americans are about a paycheck away from not being able to pay their bills. So in other words, if they get sick or hurt, hopefully they've got disability insurance. Maybe they got worker comp, if they're at work, but they need an emergency fund in place. And, certainly you need to have it close enough to you, but far enough away that you're not tempted to use that. So ultimately we want clients to be working towards, a 3 to 6 month emergency fund. And it's about comfort level to a degree. If you've got 2 earners in the family, some people feel more comfortable with maybe a little bit less. If you've got 1 earner in the family, we want that to be a little bit more. I've got some clients that feel like, I want 1 year's worth of living expenses. And that's the key, what number should we base it off of? for most people, it's not their budgeted number because you have mandatory expenses and you have discretionary expenses. It's the client choice, right? But ultimately, most people are okay doing their emergency fund based off of mandatory expenses. Most of us are willing to cut back a little bit if truly an emergency comes up. But again,
I gotta have it.
absolutely. Yeah. So yeah, it's one of those things that people need to have that conversation. And here's the other thing: we adamantly believe that clients need to have that emergency fund in place before they start investing money, because if they don't, Murphy's going to happen at some point in time, and they're going to end up liquidating what they thought was a really good idea because the emergency comes up, because things happen. Right. The basement floods. They got to call the mold guy. They got to call Clay. Maybe it's the roof. Hailstorm. They thought they was going to get a free roof. Unfortunately, the adjuster comes out and say, well, you know what, based on the age of the roof and the condition of it, really this isn't something that we cover because they thought they had hail damage and they actually didn't. So now they've got to replace the roof or an HVAC, or they got to put tires on the car. Or imagine this: kids go to school and whether it's college or elementary school, some people have the tuition bill. The tuition bill comes every year, but then it sneaks up on them again. Well, here it comes, and if they haven't budgeted for it, for some people it can feel like an emergency. So, to your point, I think the budgeting is very, very critical. People need to know what their income is. They need to know what their expenses are. That way they can make some other really good financial planning decisions. And that is for people that's just starting out. It's for people that are midway through their careers. It's true for people that are getting ready to retire. They need to know how much money they need for the lifestyle that they're wanting to lead. And that is something that we certainly go through with them on a planning process basis, and certainly have that conversation and figure out what makes the most sense for them. But budgeting, for some, it's just too tedious. Today's technology world, I don't want to say do a lazy budget. I think it's better if you get the paper and pencil out because you have that involvement and you have skin in the game, if you will. But there are plenty of good financial planning apps that can at least track what you've got coming in and what you've got outflow. So there's really not any excuse for not doing a budget anymore. If there was in the past, there's not anymore, in my opinion. So start with the budget, have the emergency fund in place, and then keep building on the other things that's important.
Okay, great advice. Well, I'm going to switch gears with you a little bit because it's something that's popping up in the news more and more and more. So we're starting to see it with like Mark Cuban, Elon Musk, and everybody's starting to talk about Bitcoin, cryptocurrency. What is your thought on it, and are you starting to get a lot more questions about it from your clients?
At the end of the day, there's different asset classes, if you will, out there, and certainly I think the financial technology, the fintech, then digital currency, and a lot of these other things that are coming online, and it's going to be more and more in the news. So certainly those are types of conversations that I think first and foremost, clients need to sit down with their advisor and have a conversation about what is appropriate and what is not appropriate in their portfolio. And I think a lot of people don't. They may read headlines, but maybe they don't understand risks. So certainly, it's not one of those blanketed things that you can say a person needs to do X or a person needs to do Y. You've got to have that individual conversation, right? So even today, there's no way possible we could say to anybody that may be potentially watching this in the future, yes, you need to own X, Y, Z. So that's certainly not what our conversation is geared towards. But I would encourage people to sit down and have a conversation with people, and people being, husband and wife, have the conversation with the advisor. Start with what do you currently own? The vast majority of people, I don't think, actually knows what they own in their diversified funds to start with. So I think that's the first starting point. And then you can get into deeper conversations about what is most appropriate asset allocation-wise.
So, and risk comes into that, right? Your age,
100%.
How aggressive you want to be.
Your spending, and how long do you want the money to last? Is this going to be something that most people want this to last their lifetime, as far as their spending in retirement? And then, certainly I think the other aspect of that is, a lot of people are more and more concerned about legacy planning, if you will. You can call it many different things, but we have a lot of clients that are talking about they are interested in leaving something to the kids and grandkids. So in that context, to me, it gets back to the planning. You need to have a plan in place. You need to have a roadmap in place. And I think that plan and the roadmap would dictate how one should invest their money. And I think that's definitely an individual, intimate thing that they need to be having conversations with their advisor about.
I would agree. It was very beneficial to us because we had an idea in our head what it looked like, but when we sat down with you and you kind of put it on a spreadsheet and kind of showed us, okay, if we invested this every month or we did this, and we could kind of see, okay, this is where we want to be when we retire, that was a huge help for us. And I think it actually put our mind at ease a little bit, knowing that, okay, this is doable and we just have to make some changes here or there and make some adjustments. So, but I do like to try to pull out a crazy story every once in a while. So from my guests, so without divulging any confidences, have you just had somebody that just came to you with this crazy request, I'm cashing out everything and buying an avocado farm in South America or something like that?
Not off the top of my head, not to that degree. I would.
I knew somebody that did that actually. But.
Yeah, you have some, and that's going to be that. And I think that's where you certainly have. It's a matter of do you have the trust of the individual client, or in other words, are they taking your advice or not? So the only one I can think of, and this probably happened a couple of times, and since I've been doing this many years, and this was back in. I guess the financial crisis maybe, and this client was interested in this one particular company, and I walked into the room, started the introductions, and it was the shortest meeting I've ever had. They basically said they only wanted to buy one individual security, and I proceeded to tell them, we didn't operate that way, and the meeting was over. So it was one of those things that. You do hear some things as far as maybe scenarios of where people are, doing some really off-the-wall things. But, we've been, I think, very lucky. We've been very selective in who we have as clients. We work predominantly on a referral basis. So the vast majority of people come to us by way of referral. So we're very blessed and thankful for that. And, certainly every now and then, you may get a potential question. And I think for us, because of the type of people we're working with, they may read or hear about something. A lot of times, I don't think it's something that they're going to act on. But every now and then, you might have a very short meeting from time to time. And we always tell clients, when we have this conversation, look, we don't sell in a down market, especially things that's going down in value. It's one of the worst possible things that people can do, right? And, so we have that conversation about the philosophy of how we approach things. And if we get that out on the early end, I think we tend to not run into that later on because we've already had the conversation. Look, the worst possible thing that you can do is sell. We've had that on the front end. And things can go good for several years, and then, the markets will have declines, as they always do. It's up and down, expansion, contraction. Those things happen. So we try to set the expectation on the front end so that we avoid those situations. But inevitably, sometimes they do happen, but really just the one that was a very short meeting because they only wanted to do one particular thing. And, we're not stock traders, okay? I don't sit in front of a computer and do that every day. When we do planning, we do investing. The cornerstone is laying the plan in place and then, managing the money based off of risk tolerance. So I think we've done pretty good as far as laying that expectation on the front end to avoid that, fortunately.
Gotcha. Well, for all of our listeners out there that maybe do not have a financial planner, what's a good way for them to give you guys a call and schedule a meeting with you?
Yeah, you can connect with us. Our website, of course, is Investments in Financial Planning. We've shortened that on the website. It's investfp.com. So investfrankpaul.com. investfp.com, and then certainly you can give us a call at the office, 859-543-8188. You can certainly, Rachel or Jennifer will, get your contact information. They'll set you up an initial meeting We're doing a lot of go-to meetings. We're doing a lot of virtual meetings with go-to, and then also some just phone stuff. We're not completely, open 24/7 at this point with COVID and everything still going on. We've got a lot of clients that are over age 65, so we've been extremely cautious about that. We do have some people that want to, drop a check off from time to time or any number of things. We certainly do curbside for them if they want to come and drop something off if they need us to do that. But we just want everybody to be safe and healthy, get through this together, and certainly look forward to being in person full time. But certainly at this point, give us a call at the office, and Rachel or Jennifer will get you set up with an initial meeting, and we'll see where we go from there.
Well, awesome. Well, I know you're a busy man, so we'll let you go, but I certainly appreciate you stopping by. I certainly value your advice, but more importantly, I value your friendship. So, and everybody out there, we will see you next episode.